Hello, everyone, and welcome to today's Traders Mind Chat live show. Today, we are going to be talking about moving averages, everything that you really wanted to know about moving averages, from the basics of them, well, what they are, what they're used for, to how to use them to gauge momentum, gauge when things might get a little bit choppy, when the market is in a nice smooth trend, well, when it's optimal to be in a trend, or when you might want to start to roll things back and get out of the way for what's coming, for the market that we have right now, right? Well, we just saw today, well, what day is today? Uh today is just scrolling to the top over here, the 7th, December 7th. And yeah, the market is rallying pretty hard today, but is it the start of a new rally, or are there other moving averages, momentums at play, other time frames that might knock it off the rails? So we'll take a look at all those things that moving averages can do for us. But now, for right now, if you guys wouldn't mind taking a moment to hit the like button and drop a comment into the chat, that's going to help blast this out to a lot more people. Truly appreciate your help in spreading the word. Now, let me come over here and share my screen, and we'll get right into it. By the way, uh, if you have questions along the way, or if you have any kind of comments, put them straight into the chat. I'll be monitoring the chat throughout all of it, both over here on YouTube, Facebook, Share Vision. The one spot that I can't see comments on right up front is Twitter. So watch us over on YouTube or Share Vision or one of those, and I will see your comments. All right, so moving averages. Let's get this show on the road. Moving averages can help us to quantify momentum. They can help us they help us to see shifts in momentum, right? So if you're accelerating or decelerating, they also can act as support and resistance. We're going to go through these three main ideas throughout the entire presentation here. So moving averages to consider, and the time frames to consider them on. There's You can have an infinite number of moving averages, really. Um, the ones that I choose to use are these here. So if we're looking at monthly charts, we're looking at 12-month and 36-month simple moving averages. So over a course of a year, over the course of 3 years, simple moving averages. That's a 12-month, and that is the 36-month. When looking at weekly charts, I like to use the 10 simple moving average and the 40 simple moving average. That's the red and the gray one right there. Now, on the daily charts, there's a whole bunch of them that I prefer to look at it. And the reason why is because most of my work is done on the daily time frames. So, for that reason, I want to be more tuned into what the shorter moving averages are doing, how momentum is shifting on a short term basis, on an intermediate, and on a longer term. And these moving averages help me do that. So here we are looking at the 5 EMA, that gray line right there, the 10 EMA, that green one, the 21 EMA, that's an intermediate term moving average. That is that purple one right there, the 21. Then we've got the 50 SMA, a little bit. So intermediate term could be, yeah, like it's more of a spectrum. So 21 to 50 falls along that intermediate term. Then we've got the 100 EMA, which is that thin orange one right there. And finally, the 200 simple moving average, that thicker gray line. So you might be asking yourself, well, why these moving averages? Well, what's so special about these ones? Well, They are used by the large institutions, namely especially on the weekly time frame. Uh, they tend to use the 10-week, they tend to use the 40-week. On the daily charts, they're really using the 50 and the 200. And the reason why is because when you're moving around billions of dollars, you can't build a position in any one stock like we can, right? Like, well, we could fly in and out of its stock, but for them, it's going to take them several weeks, several months to accumulate the number of shares that they want to accumulate. So they need to be going off of those longer time frames, the 50-day moving average, the 200-day moving average. On a weekly time frame, it's the 10 and the 40. They're about the same on those time frames. Next, uh, these moving averages were used by many of the momentum and growth stock masters, namely William O'Neill, Ed Seykota, Stan Weinstein, Mark Minervini, Jim Ropel. Read their books. It's in those moving averages are spoken about by all of them. And finally, for the 12-month and the 36-month, well, we ran our own studies. This is back when I was helping to run the New York City Investors Business Daily meetup. Well, we ran studies on that 12-month moving average that you saw before, and came up with a result that would double the return of the S&P 500 over any time frame, just based off of a simple moving average crossover study. So, all that said, let's watch how price reacts to the different moving averages. So, there's a few things that we want to be on the lookout for, right? So, when price is coming towards a moving average, we want to see, is that price getting supported? For how long has it been supported? Is it finding resistance at the moving average, right? Well, we spoke about support and resistance on a couple of live streams back. If you are new to this, go back, watch those. But yeah, support, resistance. For how long has it been above the moving average? And is it following along the moving average, or is it disrespecting it somehow? How is price behaving along these moving averages, and how long can it last? So, well, let's go through this chart here together. Right. So first, to consider the whole thing from going from left to right, and let's go through bar by bar. So from left to right, are the moving averages, are they getting support on or around any of them? Or are they finding resistance? Go ahead, type into the chat. Let me know what you're seeing on these. So far, like just from a support resistance perspective, right? Like taking one thing at a time here. Uh, Back here, you could see that price was underneath all the moving averages, then climbed back above that 10 and started to rally up to the 21 and found some resistance there. Right? You could tell that it's finding resistance because price rallied straight up to it and it did not climb higher than it. It fell the very next day. Then it attempted to get back to that 21-day moving average and it got smacked back down the following day. Notice anything else going on around those moving averages during that same period? You notice how price climbed above the 10 and above the 5, and then when it bounced back down, it stopped at those levels, right? So it's finding resistance up here at the 21, but it's finding support down here around the 5 and the 10 EMAs. Interesting. Then price comes back through the 5 and the 10, and it's now trading back below it. And then the following day, it jumps back above. It jumps back above the 5, the 10, and the 21. And now price is closing above the 21-day moving average. Interesting. And then from there, price continues to push higher. And then what? Now that it's trending above the moving average, Now it could use the 5 as support, and it comes down and it does it. And how long, you might be thinking, how long does price or does a moving average act as support, right? Let me know if you had that question. Type that into the chat. Yeah. Yeah, how long can it last? Well, um, for starters, uh, price can stay above a moving average for the duration of that moving average. So if you're above a 5-day moving average for more than 5 days, then at some point towards the end of that, so you're 6, 7, 8, 10 days above the 5 EMA, you're going to expect that price will eventually start to pull back in. Right? And so that's what happened over here. We're above the 5 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then you pull right back down, right? And you're above the 10 EMA for that same number, same length of time, and so you're going to pull right back down to it. Keeping track of where you're at as far as being above a certain moving average helps you to understand where price might pull back to. Sometimes these moving averages, you could think of them like magnets. So as we're progressing, right, like you could start to realize from back over here, as you're moving along, you're holding this 21-day exponential moving average, right? So you're above it over here. So then let's count from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, right? 22, 23, 24, 25, 26, 27, 27th day. And now you're starting to test that area. Bounces off of it, but to at least revisit that level, right? Like price did revisit that level, slightly undercut. It could hold above it for, I've seen stocks hold above it for months at a time when you get a really, really strong leader. Take a look at some of the tech stocks from earlier this year. Take a look at your upstarts and your Asanas and stocks like that. Many of them held above for the 21-day exponential moving average for a meaningful period of time. Strong leaders tend to do that, but they will revisit, test, and then attempt to find support at it. So that's part of the reason why guys like Stan Weinstein used that and wrote about it. That's one of the reasons why I use that and follow it, and have been able to use that to lock in some major winners. Keep track of how long price is above a certain moving average. Now let's consider the slope of the moving averages. Is it accelerating? Is it decelerating? Is it crossing over one another? Oh, well, what's price doing here? Okay. Well, what are the moving averages doing? How are the moving averages behaving? All right, take a look at this. What are the moving averages doing here? What are they doing over here? They're all decelerating, right? You have the 5, the 10, the 21, even the 150 they're all in decline. Only the 200 is basically flat for this entire slide right here, right? Then later on, right, it doesn't take too long for the shorter term moving averages to begin to cross up, right? They start to move back up. And as the 5 and the 10 are starting to slope back up, the 21 is still curved down. It's starting to flatten out, right? It's starting to flatten out, but it's still curved down. And that's something else that you want to pick up on too. What's the curve of the moving average when it's finally getting to it? That curve is going to help you figure out, is price likely to just bust through this moving average and be on a very strong rally immediately, or might it pause here? Might it find some sellers there? Right? So what happens? Right there, find some sellers, falls back down. Then when it finally pops back up, right? Now you're starting to see these moving averages flatten out. The 21 has started to flatten out right around this area, right? And not only that, you have some of these crossovers, right? So you have a moving average crossover there, you have another one over there. And they're starting to shift, right? And now you have a much stronger trend. Look at how strong that 5 EMA is trending this entire way. Same thing with the 10. Even the 21, once it starts to get moving, it's also sloping very higher. But what happens, right? What happens when you have all these moving averages starting to move higher over here, and then price finally does get to the 50? Yeah, price broke above the 50, but it kind of stayed in that range for a little while, right? So often, especially think of right now. Take a look at the price action right now, right? Like, in fact, well, why don't I bring up uh, the S&P 500, right? Take a look at this real quick. A lot of people are seeing this and are thinking that they missed the boat, right? So even with something like this, and you're starting to think about, well, what about some of these other moving averages back here, and how might price start to move and rally and this and that? Um, when you get that initial thrust above, price can meander around for a little bit while the other moving averages catch up. You start to form some tightness in that area. Don't feel like you ever missed the boat on anything, on especially on a rally day, like this. Eh, a lot of people might feel that, "Uh-oh, the market's leaving without me," causes a lot of that FOMO, that fear of missing out. If this is gonna be a sustainable rally, there's gonna be plenty of opportunity, and in that, you'll have price start to consolidate, start to tighten up. And if it is productive, just like it was back here when these moving averages started to flatten out and price finally got back above, right? Like, look at how tight this is versus how wide and loose and choppy this is over here, right? Different environment. Let's come back to this now. There's choppy waters during moving average crossovers. There's choppy waters during moving average crossovers. So expect choppy action, particularly on the daily time frame when you're getting all these kind of crazy moving average crossovers, right? So let's take a look at a few of those. How many moving average crossovers can you find on this chart? How many can you find? There's a lot, right? Here's the first one. Right? You see that? You see the 5 crossing above the 10 right there? How many more can we find? There's another one, 3. There's one up there, the 50 crossing below the 100, 4. There's another one, 5, right? With the 5 crossing above the 10, crossing above the 21 rather. Now the 10 is crossing above the 21. Yeah, there's lots and lots of moving average crossovers on this chart. Just keep on going, right? And it's these kinds of, yeah, it's 17 altogether. That's my count. Let me know what your count is, but that's the kind of environment, especially when you're coming off the lows like this, that, yeah, like, that could lead to a lot of back and forth, a lot of choppiness in that while you're starting to get going, and that can be okay. You could have bought this back here and survived through all that back and forth, but it depends on your time frame. It So much of it depends on your intent for the trade. I tell traders all the time, people that I coach, clients, your intent matters. If you are coming into this trade and you're planning to hold for a couple of months, then getting in when price is starting to consolidate like it did over here, right? Like you see how back here even price action was kind of wider and looser, and then it started to tighten up over here, and then price broke back above both that layer of resistance based on price structure right over here, so broke above those recent highs, and it also took out the 21 EMA, closed above it. You can see right there that, yeah, well, that might be a good spot to enter on the intermediate term time frame, because you're getting back above the moving average that is important to the intermediate term time frame. You're getting back above the 21. And you have a pretty clear spot too, both based off of that the price structure, right? Like you're moving flat over this period of time, and you're tightening up right over here, and you also have now, if price falls back through, it would need to lose the 21, the 5, and the 10 to get back down to this level. So you have multiple layers of potential support right in that zone, and so maybe you buy that. And because you are intermediate term, you would anticipate that, yeah, you know what, maybe price meanders about for a little while. Sure, price could find a little bit of resistance at the 50-day moving average, but hey, let's see what happens. Does it continue to find support at the moving average that's important for this trade? Again, we're talking about the 21-day exponential moving average for those of you that are just joining now. So yeah, but it found support at that level, and then price continued to move up. Moving average crossovers are points where you'll get a lot of this choppiness back and forth. It's important to see them. It's important to anticipate that potential back and forth, that potential chop, so that way you're not caught off guard when it happens, and you can still trade in the broader direction of the trend. Now let's take a look at the moving averages on each time frame. Again, remember, watch how price reacts to the different moving averages. Is price getting supported? For how long has price been supported? Is it finding resistance? For how long is it finding resistance? And is it following along the moving average, or is it disrespecting the moving average? So watch the slope of the moving averages. Is it accelerating? Is it decelerating? Or are they crossing over one another? Let's take a look at these monthly charts. Right? So what's happening here? Is price accelerating, decelerating? Well, what's going on over here? Right? For a long time, like over here, you start to see the moving average flatten out. Back here, both of them are accelerating, right? Both the 12-month and the 36-month. And then when the 12-month starts to flatten out, you can see that, yeah, it's price is, it's a sign that price is decelerating. Down here, price is kind of finding some resistance around that 12-month. It's going back and forth for a little while. It's acting as an important level, an important layer. Another thing too, take a look at that 36-month moving average, right? Price dipped below it, but quickly recovered. Dipped below it, but quickly recovered. How about this weekly chart here? Right, for those of you just joining in, talking about moving averages, hit me up with any questions that you have in the chat. So, weekly time frames, right? You can see over here, prices meandering around that 12-month moving average, getting support at that 40 week simple moving average. Price finally climbs back above and starts to sustain above that 10-week moving average, and then it starts to get support at it, right? Like it's trending above. So how long is it trending above? Right? So the move really starts from about here, right? So, or yeah, well, let's count from back here because that's when price finally got back above and stayed, right? So 1, 2, 3, 4, 5, 6, 7, 8. Tested it again on week 8. So then 1, 2, 3, 4, 5, 6, 7. Tested again on week 8, and it actually closed a little bit below there, right? So again, remember in the beginning when we were talking about moving averages and how long will price stay above a certain moving average? Well, about the length of that moving average. 10-week simple moving average. How long did it stay above it? Each time it tested it every 8 weeks in that period there. So roughly that amount. It's a good gauge. How about these? Right. Well, how's price behaving around these? Well, we already spoke about this, the daily charts at length, so we'll move on from that one. But let me know. Let me know what questions you guys have. Let me know what questions you guys have about this, about anything else that we've spoken about thus far, and we could even go through some uh, applying some of this right here, right now, to the current market environment. Like let's take, let's see. I would want to use that. Let's use the Dow. I think the Dow is interesting here. How many moving average crossovers can we spot on this? How many moving average crossovers? Coming back here, right? Like, well, there's one. The 5 is crossing below the 10. Then over here, the 5 is crossing below the 21. Over here, the 10 is crossing below the 21. Now the 10 is crossing below the 50 and then the 100. And the 10 is crossing below the 50 and crossing below the 100 over here. Then the 21 is crossing below the 50 right over here. And you can see both of them starting to flatten out over here. Right? And price was starting to get kind of extended in this neighborhood over here. A lot of people thought that the market was about to blow right open on this day right here on December 1st. It was a pretty nasty day. Pretty nasty day, both, yes, on the indexes and also in stocks. It's been a choppy period. And what happened right after that, right? So price breaks below the 200, comes back, finds some resistance around that 5-period exponential moving average, and now price is rallying and it's back above all of them. Now, do you think, based on what we've learned so far, that it's just going to be up, up, and away for price at this point? Do you think that it's just going to be up, up, and away? Well, maybe, right? It's a card on the deck. It's possible. It's possible, but is it probable? Given what we know about price and price action and how it behaves, a more likely scenario would be, sure, maybe we get some follow through, but would be some kind of consolidation in this general area, right? You have something else up here too. Now we're getting a little bit more advanced, starting to look at structure a little differently. Over here, you have a potential layer of resistance. You have a potential layer of resistance right over here too, right? Remember from some of the previous live streams when we were talking about price action, price structure, and let's take off some of these other moving averages, right? So just I want to remove everything, but if we take all this stuff off just for a moment, and you're just looking at structure, you have these peaks right here, right? Yeah, this could even be drawn, yeah, kind of back there too. All right, so price ran up, came back down, bounced off of that level, came back down again. Now, prior prior support is acting as resistance. Price continues to fall, rallies back up. Where might it stop? Somewhere in the zone. All right, now we start to add back in all those moving averages, and it helps tell a little bit more of the story. Yeah, down here, sure, uh, oversold, but now we're getting this bounce, and depending on your time frame, sure, maybe that's a tradable rally. If you are a short term, maybe you're a day trader, maybe you are uh, a scalper. Maybe you are a very short momentum-based swing trader. Maybe your holding period is a couple of days, uh, maybe a week. You might be able to play that. But where might price stop, right? Where might price stop? Well, we just got back above the 5 over there. So we still have some of that momentum. We have the moving averages. They're starting to turn up. One is crossing over the other over here. So it's showing some positive momentum in that regard. You still have some potential resistance in this area. Should we expect for price to just blast straight on through resistance like it's not even there? Interesting question. How about this for another perspective, right? You have all this. Just looking at some of the price action here. Just looking at the price action, is price action getting wider or looser? Is price action getting wider or looser? Go ahead, type into the chat. Is price action getting wider or looser over here than it was back here? Bit wider and looser than it was back here, right? It almost looks on par with what it was back over here, though a bit more erratic, a bit more uh, up huge one day, down huge the next day. Big part of trading too is knowing what type of condition is best for your particular style. For my particular style, this is a type of environment that generally doesn't yield uh, the types of high quality setups that I want to see, that I want to trade. Generally, I prefer setups that are nice and tight, that are controlled, that are simple, that you could spot easily, and you can break out. And it's very simple to tell if you are if the trade is going to work or if it's rolling over and it's not going to work. Those types of trades you can tend to leverage in a little bit more and make money faster. On the flip side, you are in periods like this sitting out for couple of weeks. I've been sitting in cash for a couple of weeks, really. Uh, Let me get these, uh, all this stuff back up, back to where it was before. I've been sitting in cash since basically in this neighborhood, when we switched from a yellow to red condition. Something we talk about quite a bit inside the Mara Elite program. Go check that out. But any other questions? Any other questions at all? Questions about moving averages? Questions about anything that we have discussed today? Questions in general. If you happen to be in the New York City area, if you happen to be in the general New York area, if you're in Long Island tomorrow, we are doing our first ever meetup. It's on meetup.com. I've posted the link to it on my Twitter, on my stock twits. It's all over. So if you are not already following me on those platforms, it's at Michael G. Lamott. Go check it out. I'd love to meet you guys. There's going to be apps, drinks are on the house, swag from Stock Twits. It's going to be awesome. So go on those social medias and check it out. Right? Think that is it for today. Yeah, I think that's it for today. I'd like to say thank you so much for joining me today. It's been great, and I'll see you back here tomorrow. Take care. Bye, everybody. Peace out.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.